Hello, everyone. So we are on the Q3 Rocket Lab earnings call. Sorry for being a bit late. This is my first earnings call for Rocket Lab, and I didn't know when they usually release the deck. I thought it was going to come in like 6 minutes, but it's already out. So me and Arnie, Arnie is here with me. I have a secret plan to recruit him to the Rocket Lab call. No, I'm kidding, but. You are new to Rocket Lab. You're a fellow Palantir friend of mine, a fellow Palantard, and thank you for being here. And let's quickly
My pleasure.
look, yes, and let's quickly look through what they have reported. Should I read it out? Do you think, or no? I think we can all just look at the screen.
Well, I suggest actually you go through the presentation.
Loud or just?
No, because they also dropped the presentation. I just saw.
Okay.
Because this way, basically, you couldn't read anything like from the viewer point of view.
Yeah.
So, since I start from the premise that I very, very, very broadly know what the company does, I ask you a typical question that could be helpful to figure out what could be important to notice. What are the things that you are actually paying attention to? What you want to see in these results?
Yeah, actually, future guidance, because they're doing like as I told you, Rocket Lab is one of these very interesting companies that you need to know a lot of behind the scenes information about it, and they're developing a new rocket called Neutron, which will be a competitor to the Falcon 9. Their launch price is going to be about $55 million, and because they are not profitable yet, the way I understand it is their core business would be profitable if they wouldn't be developing this new rocket, and they have quite nice positive gross margins, and so if there is huge delays on this Neutron rocket development, then they will need to like raise more money, and then the company is in jeopardy, and they need more cash basically. So that's one
So this
thing
new
that
rocket is a sort of Model 3, like the key product that potentially makes the company under stress. But if it works, then it can unlock a lot of value.
yeah, and Peter Beck, the owner, who's a very special guy, he has stated that once you have a reusable rocket that is like the Falcon 9, it enables you to create space infrastructure. And his goal is to basically create a company that is a very sustainable generational space company that is going to be here for like way after he is gone. And he gives this example like SpaceX and Starlink, that Starlink is actually SpaceX is not selling space, they are selling a service that is from space, and they have basically an almost unbeatable moat because nobody can launch
But the idea
satellites.
is more to focus on the launch of things in the space, or to manage things that are already in the space.
Yeah, so think of it like step one is the launching things into space, and this they have accomplished. And then they got from the spec they have gotten like $900 million, and they used some of this money to acquire companies that make satellites, make solar panels in space, and actually like 66% of their revenue comes from the space systems, they call it. So they're like 66% space systems, which is quite stable revenue compared to the rocket launches, because the rockets can blow up, and sometimes the customers are not ready. So and they actually did have a rocket failure in the last quarter,
Mhm.
and they recently got the okay to go back to launch rocketing, like to launch again. So they have a small rocket that is already operational and has a quite good track record, like 44 launches. They have put 150 satellites in space, and uh, actually on the small rockets, like they are the king on that one, right?
Oh, okay.
Because imagine like in the new space industry, things have been getting smaller, and there is a lot of satellites that are like a shoebox size, or like uh, what do you call it? I got the Swedish name for it, but like this carton paper box that you have. And Musk frequently mentions the kilogram price to low Earth orbit of the Falcon 9, which is really, really cheap, right? But if you're not using the kilograms, it's like getting your pizza delivered by a truck, like it's a complete overdoing
Overkill.
it. Yeah, and then there is a lot of small satellites that need to go to space, and actually SpaceX is not in that. Like they abandoned the Falcon 1, which was a similar rocket that
Okay,
Rocket
so
Lab.
the Rocket Lab wants to take the part of the smaller satellites, while SpaceX is more focused on the bigger rocks.
Exactly. And they have successfully taken this. Like they are by far the number one in that space. Like they
Okay.
and they have a competitor called Astra that is basically about to announce bankruptcy, and then they probably are going to get their customers also. So that's their step one, and then the step two is the space systems, and then step three would be to develop this Falcon 9 sized rocket, and then
Okay.
this would enable the step four, which the owner really wants to do, which is to build some sort of a space infrastructure. And Peter Beck, who's the CEO of the company, he has a sickness of, he's like the opposite of Elon Musk, that he doesn't announce what he's doing. Like how Musk can go like, we're doing FSD, and in 1 year it's coming and this is what it will do. And then 10 years later, every year he says it's like, it's coming next year, this Peter Beck, like he quietly works on the thing, and then he announces it like, in 3 weeks we are launching this new technology that we have developed in-house, and then he just launches it.
Okay.
So this is the big caveat for us, that we don't know what is this infrastructure that they're going after, and I think that they are developing different ideas, and it will be basically announced when it's ready. And yeah, and that's also something that maybe I'm hoping to hear something.
Vince,
Yeah,
I
on this
suggest you
earnings
go
call.
through the presentation. I thank you for the overview.
I open the presentation, but oh my god, they're going for it. I'm just also checking the comments.
No,
Is
one
he
comment.
trying to convince this dude on Rocket Lab? Yes. This is Vince and friends. I didn't dare to do this episode alone, and Arnie is a really good analyst, so I'm actually quite interested in what he would think about this company. And now I will go through the
You know
report
that
and
even
see.
Italy has a company like
A space
this.
company, really?
Yes, yes, it's called Avio. And
But
actually,
did they manage to launch something to space?
yes, they are basically the key launcher for the European agency, the European NASA.
Really?
I
That's
actually,
awesome.
it happened that I studied that company. Was actually quite interesting, but rather than being looking at something like a company that was growing fast, it felt more like a company that already was mature and getting the government contracts to launch stuff and very quietly develop better rockets. While Rocket Lab, SpaceX, like seem very focused on the mission. Okay, let's disrupt this industry.
Yeah, yeah. Okay, I'm just going to quietly go through it now, and then I come back to you when I'm done.
Yeah, I don't understand why you don't open the presentation.
Is it not shared? No, it is shared. How do you mean open?
What are you? Is this the press release or the presentation? The one you're looking at.
Let's see. You see,
Look
it's
at
my
what
first one.
you're streaming.
Yeah, I see. But
Okay.
I think this is the.
No, that is the
Okay.
press release.
Okay, let me see. I just don't know how they.
Look the private chat.
Okay. I'm just gonna look at what they have. So Q3. Because I think that this is all they have for now.
No, look at the private chat of StreamYard.
Somebody sent me the link. But did you send it to me on Twitter?
On StreamYard.
Scroll down. But why am I?
Please.
Okay, there it is. I see yours, Arnie. Okay, and why can't I click on this?
Well, look at the private chat tab above the comments
Private chat.
on the left.
Okay. Okay, I feel like an idiot, but I don't find the private chat now.
Oh no! You're making me older.
Can you send it on Twitter, and then
Yeah, sent
that
it.
one I can. Okay, here we go. Technical difficulties. It's coming, guys. We have lots of time before the earnings call. Finally, I have it.
But you need to open like
Yeah, it's loading. So now I'm going to open it.
And what is the thing that triggers you the most about this company? Because, for instance, for me, space is something that is fascinating, but at the same time, it feels like, okay, in order to be a good business model, we probably need to wait still 5-10 years, at least, at the very, very least. Now, maybe the valuations are more appealing, yet it feels something that is far apart.
Yeah. I mean, I just go through the presentation, and then we can go through this. So, and so 2 successful launches, deployed 7 satellites, 1 satellite, Electron update. Good. They have a new flight scheduled. Okay.
Yeah, don't read that as it you're reading for yourself. Read it with us.
Okay. You see, thanks for coaching me. This is, when we do the Palantir earnings calls, it's like with an experienced team, and I'm just like a guest there, and then it's so easy because if I'm reading, then the others are talking.
Well, that's why
this is why
like
I didn't dare to do this. This is why I didn't dare to do this alone. So, very good news that there is a clear launch date on the Electron. It seems like there was this very weird thing. I'm telling this to you, Arnie, that they got the approval by the government to launch again when the what is it called, like the root cause, they didn't discover yet what it was. And I think it's kind of funny because normally the companies are faster and then they are waiting on the government, but here the government was like, yeah, no problem, you can launch again. and then they are the ones who are going, but we don't know what caused it yet. So we do more investigation. So it's very good that we have a new launch date.
Do you think the government is under pressure because they don't want to give too much to SpaceX?
Definitely. I mean, I don't think in this flight license, I don't think so. But for example, why I'm so not scared of this company going bankrupt is that they definitely have this consideration that this is a very viable company and they would keep them alive at any cost, I think. And also, I think the New Zealand government would do the same.
So it's a similar consideration to what I liked Sachin said months ago, that imagine something very, very bad happens, the government needs to keep Palantir alive.
Yeah, exactly. Okay, only 1.6 seconds of anomaly data. I mean, that's okay. I'm not a space engineer, so stage 2 power loss, stage high voltage. Are they like giving us the problem as a shareholders? Like, here's the data, we can't figure out what happened. Crowdsourcing the high voltage bus drops to 420. Igniter pressure.
The investigation.
Yeah, I have no clue. It's funny that they share this. I have no. I'm trying to see if I find anything that is useful for us, but yeah, you guys can let me know in the comments if you guys know what this is for. It's so funny that they even the next slide is about this anomaly, and they're like 12,000 data points. And
what do you think they go so deep into explaining a technical thing to shareholders?
I mean, this is always, when you're on live, you're in danger of saying something stupid because it's like you didn't have time to think through it. But I would guess that it's like a PR thing. They are a very professional company, and they're a bit different from SpaceX on this. That SpaceX very publicly can fail sometimes, and they push for. Like just try it, and then if it blows up, then we know more. And this guy Peter Beck, he has said that they're different. Like when they take something to the launch pad, they actually expect it to work, and they're trying to do all the work before to make it go right. So I think that they're trying to show like how much they're taking care of this. See, including the phenomenon of Pascal law, where the ability it's so funny. Okay, I'm not even gonna. I take that later because we're not engineers here. We're investors. $22 missions booked in 2024. That's super good, actually. That's so very, very
22
bullish.
missions for rockets to be launched in 2024.
Yeah, and it's because it's the reason why this is very bullish is because when you launch the rockets, the personnel that you employ in the launch site, like they don't care if you launch, like 1 in a year or 4 a year or 10 a year. Like it's the same amount of people, right? And they talked about on their investor presentation that the way for them to get very nicely profitable is to increase the cadence of the launches, because then the usage of the facilities around the rockets gets amortized on a lot more rockets at the same time. And so, this year, yeah, go ahead.
So potentially, if all the quarters were like Q4, it would be very good.
Yeah, I think they were going for 15 launches in this year. But because they had this anomaly that happened, I think they are going to land at 12 this year. And with that, the company is growing. Now, I'm probably going to say something stupid, but I think 60% compared to last year in income, right? And then
Mhm.
with the 22 launches, they are going to grow like almost 100%. But you have to remember that this is the like 33% of their income, because the other
Mhm.
66% is the
The
space
systems.
services. Yeah.
Wait a second.
Yeah.
I think this could helpful to all people just joining that maybe don't know the company like me. When they launch a rocket, let's say they launch these 5 launches in Q1, how are the revenues generated? Like they get paid once the launch is done, they get paid for all the process, and they maybe if the launch doesn't go well, they need to reimburse. How
No,
how
it's.
the
I know
revenues are
that.
structured?
I know that. To be honest, I don't know. I would guess that they get paid before the rocket is launched. It's just a guess. If not, then I guess immediately as they launch the rocket. But the rockets are insured, so it's part of the in any, even the Falcon 9 is insured. And if the rocket blows up, like they still get paid, and then the customer gets reimbursed by
By
the
the
insurance
insurance?
company.
This is
Yeah.
interesting. So
So
basically,
so
they just need to focus on building the capability and minimizing the probability of failing. It's not that
exactly.
they risk literally the revenues. They have more a reputation risk because if they blow up, people don't want to launch things with them.
Exactly. And then when they
Mhm.
blow up, then they need to find out why they blew up, and then that takes time, right? And then that during that time they cannot launch and they have zero revenue. And I guess every time they blow up, the insurance premium goes up a little bit, so
Mhm.
to the end customer it becomes more expensive. But this rocket, this Electron rocket, is super like, I think it's 90 something percent mission success, even with this failure that they had. So it's a very, very reliable rocket.
Mhm.
And
And I
yeah,
saw Konstantin. Hi, Konstantin has a great question. Since the operating margins are negative, how many rocket launches should it require to basically break even?
that's a very good question. And it doesn't only require rocket launches, because that's only 33% of the company, right? So it requires the rockets and the space systems to both be profitable. And my understanding is that if they were not developing the Neutron rocket, they would be profitable already now. So this is something that I hope to hear more about in the earnings call, because obviously I would like to know how they're planning on the finances. And I have a very strong suspicion that they will need to raise money from the markets one time more. But obviously, if everything goes as planned and there's no delays in developing this Neutron rocket, but in the space industry it's very usual with delays, then they don't need to.
I'm looking at this slide that 27% gap launch gross margin captured my attention.
That's
How
very nice.
should
That's
we read it? Like a gut feeling is that's a lot for a hardware component. How do
yeah.
you compare it with the general gross margin of a company and the previous rockets?
Yeah. Um, it's a tough question to answer, because in the space industry there is like a lot of private companies, so it's hard to compare it to like you don't have, like in the auto industry, that you can look at 10 other companies. SpaceX, we have no idea what their margins are. There is another company called Astra who has widely negative, even gross margins. But I myself think that it's very healthy gap margins. And you have to keep in mind that this is with low cadence. So meaning that they only launched 12 electrons this year. And once they start launching 22, then they're not increasing the cost on personnel,
Mm-hmm.
right? So like this gap or the gross margin is going to go higher as they increase the yeah. So this is a very positive sign for me. additional accomplishments. Here we go. So major neutron tank milestone achieved. They basically, this is the upper stage tank of the rocket, and they pressure tested it to see if they think, because the computer models gave them that this should be able to tolerate a certain amount of pressure, and then they tested it in real life, and it did tolerate it, and then they maxed it and blew it up to see like what is the actual maximum that it can tolerate, and they were very happy with the results. More than 15 electrons worth of liquid nitrogen was used in the testing, with pressure testing exceeding the tank's maximum expected operating pressure at more than 7 times atmospheric pressure.
I see a comment from Francisco. They are going to have 9 recoveries. If they start recovering and reflying, the rocket's margins will go up. So
Yeah, that's
the
an
9
additional...
recoveries are what they expect to happen, but they're not happened yet, right?
Yeah, I think they have done 1 recovery of a rocket, but they haven't reflown any rocket yet. And then if they're planning to recover 9 new ones this year, I guess maybe it's later down on the slide. That's also something that is going to increase the gap gross margin. And from an investor day presentation, they said that they want to reach 50% gap gross margin on the rockets.
50?
50, yeah. I mean, it is, how do you, like, I don't know what you think about the 27%. For me, it's, I mean, if you just compare it to Tesla, they had like 17%, right? And for a hardware company, I think it's very nice. And knowing like the savings that that is coming for them, like, I don't know if they will reach the 50, but I mean, if they have 40%, it's very, very nice, I think.
I see.
Next, neutron tanks and structures being built. Oh my God, the call is in 9 minutes. And how long
So
is this?
you should
We are halfway.
Faster.
Yeah. So following the successful tank test, the next full-scale neutron parts production, including tanks, first stage, fixed fairing, and other is underway. That's very good. The next neutron second stage tank test is scheduled to take place in the first half of 2024. Why do they need to test it again? Okay, but maybe they go into that. This is the new engine that they're developing for the Neutron, and yeah, the tests are going good, I guess.
I go faster on and slide 18.
Key infrastructure is going quickly, yeah. 1 sec. That's super nice. Yeah. I don't know if this is a real representation of how far they, because this makes it seem like they're 85% complete with Neutron, and I don't think that that's the case. It's more they're just trying to show how it's going.
Haste is the other rocket.
No, Haste is a suborbital mission that I think is a military mission. I don't fully understand what they do, and this was one of those things that they got the contracts, and it's a new use of their rockets. So it's like a different way how they use the rocket, and they didn't say that they're looking at this. They didn't say that they're getting customers. They just announced that we got, I think it was 4 rockets booked, and we are flying the first one in 2 weeks, and it's a very big contract for us, So it's their culture somehow of, just doing what they say and not going into this very futuristic plans, and yeah, so they secured 7 additional contracts, and that's really, really good.
Okay, so basically the business model they have is getting paid to launch stuff in the space, and the second part of the business is basically building satellites.
Exactly. Here it says what they're building: star trackers, reaction wheels, solar panels, separation systems. And then the third part of their business, that's the one that is not out yet, is that they're going to use the first two parts and build some sort of a space service for Earth. And that is
as a
not
software or again as a hardware?
no, everything. Like they will build the satellite, the software that is running the satellite, and they will use their own rockets to shoot it up in space.
Okay.
Okay. Global star production on schedule. Good. Yeah, I know they have this new employee. Very good. Finances. So let's see. 68 million, that's the higher end of their guidance. 9% increase on quarter-over-quarter revenue.
Okay, what is the most interesting part of the business? Like, is the space, is the launch or the space systems the part where you should expect them to get more money?
For me, it's the third one that is not announced, because if you look at SpaceX, for example, like their valuation was around $30 billion until they came up with Starlink, you know, and after Starlink, their valuation is $130 billion, right? And there is many interviews on that I watched, that if you look at the space industry is a very big, like it's supposed to be $1 trillion industry, but the launch part of it, like the shooting up the rockets, is like maybe 100 million, right? And then the other, like basically 10x, is coming from services from space, which is, you know, Starlink, satellites, different service companies that already exist. And you know, Kuiper from Amazon, like these are, and he's saying that that's where
the big value comes.
Like
but to do that, basically you need the first two components.
Exactly. And what's crazy is I think just the first two components is also going to be profitable soon. But that's what I'm excited about. Is right now this company's valuation is $2 billion, right? SpaceX's valuation is $130 billion. And if they find a way to use this space infrastructure, I think it will easily add $20 to $30 billion to the current valuation, right? And you can do models where just if they don't even come up with anything, just they continue to do well on the rockets and on the space systems, you can get to like a $10-15 billion valuation easily with this company. So it's you have a lot of upside, and obviously, I mean, it's a lot of risk also. But I think that it's what I said, you know, that if you truly do your study, like there's very little risk of bankruptcy. Like for me, the biggest risk is that you know, they miss the timelines and your money stays the same, because I do believe that if they would be going bankrupt, like they would be bailed out by NASA, they would be bailed out by the New Zealand government, and yeah.
Well, it depends a lot on how big actually is the risk of going bankrupt. That depends on how money they are actually burning, if they are expected to burn much more. Basically, the idea is if the expectations is for them to keep burning the same amount of cash, more cash or less cash. Depending on this, then everything changes in terms of valuation.
Yeah, I'm trying to see what was their loss, because they non-GAAP.
Slide 28.
28, yeah. Because they have 400 million in cash, and I think that they're burning like maybe 30-40 million per quarter.
Yeah,
so
correct.
They have non-GAAP free cash flow 47 million. So they have quite a lot of quarters, and I think that if Neutron, the rocket, goes as planned, like it will pull them out of like they will be cash flow positive.
And when is this supposed to happen?
2024, end of 2024, but that's the here financial outlook. $95 million. This is like a 50% increase in Q1.
For what?
For revenue.
Okay.
They're not talking about the cash. Maybe it's gonna come on the earnings call.
Explain the slide to me. Don't assume you're looking at it alone.
Yeah, I'm trying to, because what I'm looking for is I'm trying to see, because they give a revenue outlook, right? And that's very nice. I mean, okay, the Q4 is basically a small increase, but I know that it's because they couldn't launch. So their first launch this quarter is coming at the end of November, and then they have 1 month to launch. And so the 69 million would be, I think, a slight increase in revenue. But what I'm really interested is like what is the cash loss that they're planning, and I think that this is going to come in the earnings call. So that's definitely something that I'm really looking for is, how are they planning to be profitable? Will they need to raise money? How are they thinking about their own cash levels? And that was the whole presentation, and we just made it through. I mean, I will make videos on this later when I have time to really nitpick into everything. Let me see if the call is...
Is there some information that you really want to hear from the presentation, from the call?
I mean, as I said, it's the cash going forward, the Neutron development going forward, if they can give any clues on the space infrastructure that they're planning. These are the three that I'm most looking for, because on this
Meanwhile,
slide present. Sorry?
Meanwhile, put the call that has just started.
Yeah, it's the music. I'm gonna add it now. Do you hear the music now when I shared it? Okay, good.
Well, better than the hospital music Palantir had.
Exactly. That's funny that Carp even called it out. So thank you guys for being in the chat and being here and listening and helping me out. As I said, I muted the music, but I will put it back as soon as it starts. So thank you for being here, all 50 of you. And yeah, as you get more practice, you get better. And hopefully, I really want to build a community around this stock like Amit has done with Palantir. And now that we're not looking at the slides, so Arnie, you asked me like what makes me so excited about this stock. And I'm genuinely a space nerd, you know. I didn't even know that I heard about this company before, right? But if you look at my YouTube, homepage, like you will see that it's like stock market, space videos, and then stock market, space. And I was very much into both the science of space, into SpaceX, but you cannot invest into SpaceX. And
Sorry, Vincent, to interrupt you. In the comments, they're writing that it started. So refresh the
let
the
me
page.
do that. Yeah, it did.
Okay, put the audio on.
It doesn't have audio yet.
No, it's you having the audio at the minimum. I see you.
Oh, yeah. Okay, good.
Entire engine set as our next major reusability goal. So next I'll provide a bit of an update for Electron. Following those 2 successful flights, as you know, we unfortunately experienced an anomaly on our 41st mission. It's important to remember that up until this launch, we have had 37 successful orbital missions to place 171 satellites in orbit, and the past 2 years have been flawless with a record of 20 successful missions, one after the other. For Flight 41, as soon as the issue occurred, our team jumped into action. In the week since, the team has been scouring through thousands of channels of flight data and manufacturing data to determine what was the probable root cause. I'll take you through their investigation in detail over the next couple of slides. Working in parallel with the FAA has conducted its own review of the mission safety processes, plans and procedures, which concluded that they all worked as they should to keep the public safe, and I am pleased to confirm that the FAA has since given us approval to resume launching from Launch Complex 1. With our investigation in its final stages and our launch license remaining active, we are fully anticipating to return to flight within the next few weeks. Following updates and changes to our testing and manufacturing processes, we'll be returning to the pad with an even more reliable vehicle to meet our busy launch manifest for the remainder of 23 and into 24. Now, let me take you through what happened and what we've learned. So here's a slide on the anomaly timeline. The anomaly that ended the mission happened incredibly quickly. From the first action in the chain of events when Electron cut off its data relay, the team only had 1.6 seconds of anomaly flight data to work with. This was always going to be a highly complex issue to figure out, but with deep diligence and analysis, here's what we've been able to determine. On our 41st mission, launched September 19th from LC-1, it completed all the usual launch milestones through liftoff, max-Q, stage separations. And at 151 seconds, the second stage engine tried to ignite, which is confirmed by flight telemetry that showed the igniter pressures building and the LOX and kerosene pump speed rising to pump propellants into the combustion chamber. The voltage levels from the battery packs that power the engine and the motor controllers are nominal at this point, and nominal at that point of ignition, but within milliseconds, in fact, 151.7 seconds, we get our first indication of the anomaly. The system's high-level voltage levels take a sudden dip and rise of about 100 volts within 30 milliseconds, indicating an energy escape from the system that then led to a full loss of power to the second stage lower avionics, cutting off telemetry and communication with the second stage. And with that, it was all over. So we'll move on to the issues. So you have to bear with me on this, there's a little bit to talk about here. But with good visual evidence, with the onboarded cameras and over 12,000 channels of data, and this high-level timeline to draw from, the investigation narrowed in on the issue. More than 200 sub-investigations were launched to rule out hypothetical causes of the anomaly. After more than 7 weeks of extensive analysis of the mission's manufacturing, test and flight data, the findings of the Rocket Lab investigation team overwhelmingly indicate an unexpected electrical arc occurred within the power system. Shown in the image on the top right, the team did some tricky optical triangulation and image processing of a small shadow on the engine bell caused by the arc. From that, they were able to pinpoint and retriangulate the failure's point's origin to an area where the two battery packs connect, known as the fix pack, to supply the high voltage power. So now we're all going to take a little lesson in Partian law and Partian curves. So Partian law describes how in partial pressure environments, the likelihood of an arc to occur changes in high voltage systems depending on the environmental composition. An approximate guide they can then be applied across different situations called the Partian curve, which uses the relationship between voltage, pressure, multiplied by distance to indicate what the range of danger is for an arc to form through various gases like helium, argon, nitrogen, etc. So the graph on the bottom right is what's known as a highly simplified Partian curve. So basically, the easiest way to think about this is if you have a positive and a negative terminal of a battery at 500 volts down here on Earth, you could place those two terminals of the battery about 0.03 millimeters, or 1/3 of the thickness of a human hair, beside each other, and they would not create an arc or jump a spark between them. Now take the same 500-volt battery and terminals and put them in the worst part of the partition curve, which just happens to be just after stage separation and stage 2 ignition of Electron. And the same 500-volt battery and terminals will now arc to each other when they are nearly 1 meter apart. So different gases, different pressures affect this distance, and there's also other things like AC ripple that can have a huge negative effects. But for now, let's just keep it simple. For Electron, with its high voltage 500-volt rail power supply, we have to ensure that every connection is essentially hermetically sealed. A tiny pinprick or insulation failure will result in arcs, given that they can travel over large distances when in the passion curve. All of this is in flux and very transient because as we ascend higher during the second stage burn and go into the hard vacuum of space, the arcing distance goes back the other way and it becomes hard to arc again. It's really just at stage separation where things are the worst and we bottom out the partition curve. As you can imagine, this is extremely difficult to test for down on Earth. We actually, currently put the whole rear engine assembly in a vacuum chamber, pull it down and inject gases like argon to try and aggravate the phenomenon. But even the smallest insulation compromise cannot always be detected, especially when you compile that with other factors like AC ripple and trace gases. Excuse me. So now that everybody understands partition curves, during the second stage ignition, we're at the worst part of the curve, and we had a small concentration of helium in the vicinity of the upper stage, which is normal, and a high voltage AC ripple that lowers the spark threshold even lower, and a tiny undetectable fault in the HV loom insulation. All of which, all of which combined allowed for an arc to briefly occur. If any of these things were not present, then the failure would not have occurred. All four had to be there, and to be honest, with all the testing we do before flight, you would also have to be incredibly unlucky to have the insulation failure point also line up with an electrical path to be able to arc the chassis. And look, I don't generally believe in luck as an engineer, but in this instance, I would say that so many things had to line up that most people would say that this the probability of this occurring would be largely improbable. So with that, now that we kind of understand and we've explained the failure, what are we going to do to get back to flight? So the failure is obviously a highly complex set of conditions that are extremely difficult to predict. Our team's top priority through the investigation has been to find a way to make sure that this never happens again. And as a result, there's a couple of key corrective measures. The first is to increase the fidelity of the stage level vacuum testing. We now have a much more sensitive instruments implemented in the pre-flight tests, both at the component level and the stage level, that can sense partial discharge all the way down to a picocoulomb now. This gives us much more confidence in the testing. However, I was not happy to stop there, and so we've implemented a rather brute force solution. What we've done is seal up the battery frame that contains all the high voltage connections and equipment, and then pressurize it to about 0.5 of PSI. I'll draw your attention to the graph on the top right. Surprise, surprise, it's another partition curve that shows that by pressurizing the high voltage area, we shift the partition curve to the left out of the red zone and into the green zone, meaning basically we're back to what it's like on Earth, where it's not really possible for big arcing distances to occur. Now, this has been a lot of work to implement by the team and is a fairly extreme solution, but really I felt it was the only way we could put the partition law well back in its box. So the best way to solve a problem, in my opinion, is always to eliminate the problem, and that's what we've done. Getting to the bottom of the issue and back to the pad for our customers has been the team's #1 priority. It's been incredible to witness their perseverance, dedication over these past few weeks, not only on the anomaly investigation, but in the work that they've completed in parallel to make sure that we're good to go as soon as we get back to the pad. The launch window for our return to flight mission will open on November 28th and extend into December. This dedicated mission will be for IQPS, a Japanese-based Earth imaging company, with the rocket for that mission going through pre-launch testing on the pad at Launch Complex right now. So move on to Electron Launch Manifest. So in 2024, we have a really big year ahead of us. Even with our pause in operations, Electron remains the world's most frequently launched small orbital rocket. Dedicated missions for small satellites continue to experience strong demand, which we've seen in multiple bulk buys by returning customers and constellation operators. In fact, we've booked out Electron launches next year, completely booked. We see the market for the Electron product being very strong, and this manifest validates that. Frequent launch opportunities, flexibility over schedule, and control over orbit deployment are what our customers are looking for, and that's what Electron has been providing and will continue to provide in the new year. And all we have to do really with our 2024 manifest is execute, as in with anything in the space industry. By ramping Electron production and keeping on top of demand with recent acquisitions, as well as continuous improvement in automation across our manufacturing processes, we look to continue improving on an already impressive performance in manufacturing. We also note that the scaling is coming with improved gross margins. In Q3 2023, we achieved a 27% GAAP launch gross margin, which should look to enable to progress our profitability targets for Electron as we drive scale and efficiency into the business. I now want to take you through and highlight some of their accomplishments so far in Q4. So Neutron structures. We'll start with a Neutron update. Earlier this quarter, we reached a major milestone and had a Frosty second stage tank up on the stand for structural and cryogenic testing, which is really a key marker for our Neutron program development and program. The team's job was to push the tank to its absolute limits by loading it up with cryogenic fluids and test to destruction. Something like 96,000 litres of liquid nitrogen was used for this test campaign, and an exploded tank in this instance is very much a good thing and what we wanted to achieve. The team took the tank past MEOP, or maximum expected operating pressure, at more than 7 times atmospheric pressure. What they've learned in the campaign has been applied to the next stage 2 tank and currently under production, to bake in structural reliability early as we get closer to our date with the launch pad. Speaking of baking, this is quite literally what our carbon composites team has been up to with their next full-scale Neutron structures and components. The images on this slide here show you the scale of some of the in-tank devices being produced, more than 7 feet in diameter for those circular propellant management devices, and the stage 2 dome being laminated in the bottom section. Molds for Neutron's fixed fairing sections are coming together nicely, and of course we have another second stage Neutron tank being built for our next test stand, to go on our next test stand in the first half of 2024. Then over to Neutron's Archimedes engine. Another test we're celebrating was a critical combustion test that the team achieved with Neutron's Archimedes engine. There's plenty of benefits to pursuing methane LOX propellants, but it does come with some of its own challenges. The critical piece really, and one of the challenges was in using methane and liquid oxygen for Archimedes, is getting the pre-burner dialed in. Where generally you want a fuel mixture ratio in a chamber of something like 3:1 oxygen fuel, we're running an oxygen-rich pre-burner cycle on Archimedes that forces us to flow all of our oxygen through the combustion device. Therefore, our ideal mix is something between 60 to 100 to 1, which is a challenging thing to achieve without all the excess oxygen extinguishing combustion. Archimedes also has an extremely benign operating point, making it great for reliability and reusability, but it does mean that the pressures are low and, ironically, harder for the pre-burner. But I'm happy to say that we met all the operating points that we wanted to on those tests. That was a great accomplishment by the team. At the same time, the Archimedes team had been producing and testing full-scale hardware like valves, chambers, injectors, controllers, and assemblies in preparation for development and propulsion tests, making for a really impressive sight when all the pieces come together, like you see in the photo on the slide as well. Over to Neutron infrastructure. So supporting infrastructure for Neutron has also scaled quickly over the past few months. Groundworks have been completed in Virginia, where a Neutron pad will be. Test facilities and support services will be based there as well. And we're ready for construction to begin at a launch site located close to our key government customers, which will enjoy the benefits of a less congested launch site than obviously the Cape. In Q4, we opened our new engine development centre in Long Beach that will support the development and production of the Archimedes engine. And once the engines are completed at EDC, they'll go to testing at our stand at NASA Stennis Space Center, where the Neutron team has been busy with site improvements to accept the engine for hot fires. And then finally, Neutron timeline. All of these achievements across Q3 and Q4 that I've mentioned, and several others are shown here, have been great to tick off along the Neutron timeline. We've completed second stage tank testing, printed key Archimedes engine parts and components, had success with our combustion testing devices, completed qualification testing of our composite overwrap pressure vessel, run through separation lock deployment testing and stage pusher system testing, completed our actuator motor controller testing, finished test on our power management module, confirmed Neutron's engine and stage controller functions as it should, completed avionics controller testing, successfully tested the vehicle's thermal protection system, stood up the test rig for the incoming Neutron canard and canard system testing. The team is obviously working hard to keep our ambitious schedule for the rest of the year and into 24, with some of the next year milestones to look out for, including first stage qualification tank test completed, Archimedes engine testing campaign, and the first simulated flight to orbit with our hardware connected to our flight computers. Now, we will continue to provide updates on how Neutron is tracking outside our quarterly reviews. Beyond Electron and Neutron, our hypersonic test vehicle, HASTE, has seen significant amounts of interest from new and returning government customers looking to further develop the nation's hypersonic testing capability. We've actually booked 7 launch contracts in the 6 months since our HASTE program was introduced, including our latest mission announced today. A HASTE launch from Virginia from the US Department of Defense Innovation Unit. This mission will demonstrate HASTE direct inject capability by deploying its payload during ascent, while still within the Earth's atmosphere. A long sought after capability for the nation's strategic defense and civil needs at a fraction of the cost of the current full-scale tests. On to space systems now, and we have a new spacecraft order on the books for a confidential constellation customer that builds on a strong demand for our satellite products. This particular spacecraft will include a full suite of our own satellite components and subsystems, including star trackers, reaction wheels, solar panels, S-band radios, flight software, and so on and so forth. This contract in particular speaks to the popularity and configurability of our spacecraft bus, but the confidence also in our satellite components in the market and our ability to grow as an end-to-end mission partner for the space industry. Now, importantly, we'll also be managing the mission's operations and a further demonstration of our end-to-end business model of building and operating satellites that we build for our customers. Continuing space systems to our largest space system contract now, the $143 million contract we have with MDA Globalstar. We're getting close to the delivery of our first of 17 spacecraft for the program by the end of Q1 next year. Having cleared significant milestones in the contract in the past few months, the spacecraft critical design review and delivery of a structural thermal model for the customer. We expect to recognise revenue from those invoice payments to MDA in the fourth quarter of 2023. This sets the stage for a more meaningful revenue contribution from this contract as we enter 2024. We continue to pursue increasingly complex and financially needle-moving space system opportunities and are encouraged by progress being made in this part of our business. And we believe that these pursuits position us to continue scaling as an end-to-end space solutions leader. Lastly, in space systems updates, we're proud to have directly supported the success of NASA's groundbreaking Psyche mission launched in October, with our solar panels powering the spacecraft on its 6-year journey into deep space. These solar panels we provided to the mission hold the record for being the largest solar panels ever installed on a NASA JPL satellite, which we're immensely proud of. And then finally, into post-quarter achievements, I'm thrilled to welcome retired US Space Force Lieutenant General Nina Amano to Rocket Lab's Board of Directors. Lieutenant General Amano served more than 35 years in leadership positions across the US Space Force and US Space Force, including US Air Force and US Space Force, including being the first Lieutenant General officer appointed to and Director of Staff for the Space Force, where she established America's first new military branch in 72 years. She's had an accomplished and distinguished career in the military and will be an invaluable asset to the board. And now, over to Adam for the third quarter financial highlights.
Thanks, Pete. Third quarter 2023 revenue was $67.7 million, which was near the high end of our prior revised guidance of $66 million to $68 million. Third quarter 2023 revenue reflects sequential growth of 9%, the result of 3 launches and continued growth in our space systems business. Our launch services segment delivered revenue of $21.3 million in the quarter from 3 launches and is in line with post-anomaly revised guidance of $22 million, with the slight underage due to timing of revenue under a launch study contract. The resulting average revenue per launch came in at $7.1 million, below our target average selling price of $7.5 million for 2023, and the result of less favorable mix in the quarter. Our current backlog continues to reflect our target average revenue per launch, with variability tied to LSA volume commitments, launch location, and unique mission assurance requirements. Our space systems segment delivered $46.3 million in the quarter, which was up 17% sequentially and modestly above the high end of our prior revised guidance range of $44 million to $46 million, driven by a step up in our MDA contract revenue, offset somewhat by a reduction in our components business, which is poised to rebound in the fourth quarter guide that we'll discuss later. Now turning to gross margin. GAAP gross margin for the third quarter was 22.1%, above the high end of our prior revised guidance range of 18 to 20%. Non-GAAP gross margin for the third quarter was 29.5%, which was also above our prior revised guidance range of 26 to 28%. GAAP and non-GAAP gross margin improvements relative to our revised Q3 2023 guidance reflect continued efficiencies in both our launch and satellite manufacturing businesses. We ended Q3 with production-related headcount of 816, up 49 from the prior quarter. We also note that non-GAAP gross margins reflect a 430 basis point improvement versus Q2 2023, when adjusting for Q2's one-time $4.1 million release of a loss reserve related to a legacy launch contract. We're encouraged by the trend in gross margin improvement and expect this trend to continue into 2024 as we return to launch and resume growth in Electron's launch cadence against our strong and growing launch backlog. Turning to backlog, we ended Q3 2023 with $582.4 million of total backlog, with launch backlog of $250.7 million and space systems backlog of $331.7 million. Relative to Q2 2023, total backlog was up 9% sequentially, or $48.1 million, thanks to healthy bookings in our launch business, partially offset by declines in space systems. For launch specifically, backlog was up 55% sequentially, or $88.8 million, as Electron continues to benefit from return orders of both commercial and HASTE customers. For space systems, backlog was down 11% sequentially, or $40.7 million, as we continue to work through our larger satellite manufacturing contracts, and the timing of additions to space systems backlog are lumpy due to the increasing complexity and magnitude of these contract opportunities. We expect approximately 57% of current backlog to be recognized as revenues within 12 months, and expect continued meaningful growth in our backlog as we exit 2023 and progress through 2024, thanks to continued demand for our Electron platform, as well as anticipated orders for significant satellite manufacturing opportunities we've aggressively been pursuing over the last year or so. Turning to operating expenses, GAAP operating expenses for the third quarter of 2023 were $53.8 million, modestly above the high end of our original and unrevised guidance range of $51 to $53 million. Non-GAAP operating expenses for the third quarter were $39.8 million, which is at the high end of our original and unrevised guidance range of $38 to $40 million. The decreases in both GAAP and non-GAAP operating expenses versus the second quarter of 2023 were primarily driven by contra R&D credits related to Neutron upper stage development from our U.S. government partners, partially offset by higher Neutron development spending, increases in headcount, and higher depreciation and amortization expenses. In SG&A, GAAP expenses decreased $1.5 million quarter on quarter due to a change in contingent consideration related to our PSC acquisition due to a lower average stock price in the quarter. Non-GAAP SG&A expenses increased by $700,000, primarily due to increases in headcount, along with a step up in depreciation and amortization, primarily related to additions to corporate IT and security infrastructure to further enable efficient scaling of the business. Q3 ending SG&A headcount was 236, representing an increase of 8 from the prior quarter. In R&D specifically, GAAP expenses were down $4.4 million quarter on quarter due to increased contra R&D credits related to the previously referenced Neutron upper stage development, partially offset by a step up in Neutron development spending. Non-GAAP expenses were down $4.3 million quarter on quarter, driven similarly to GAAP expenses by Neutron-related contra R&D credit and development spend. Q3 ending R&D headcount was 520, representing an increase of 2 from the prior quarter. In summary, total third quarter headcount was 1,572, up 59 heads from the prior quarter. Purchases of property, equipment, and capitalized software licenses was $21 million in the third quarter of 2023, an increase from $10.6 million in the second quarter of 2023. The sequential increase was due to our continued investment in Neutron research, testing and production infrastructure projects, along with the expansion of our satellite production and space solar solutions capacity. Cash consumed from operations was $25.2 million in the third quarter of 2023, compared to $6.1 million in the second quarter of 2023. The sequential increase of $19.1 million was driven primarily by timing of receipts and payments associated with our satellite production programs, which, for some of our larger programs, have significant periods between milestone achievement, invoicing, and ultimately collections, which at the end of the day are purely timing related. More specifically, Q2 was a quarter that benefited from a working capital dynamic where we collected on material milestone invoices that were invoiced in the prior quarter, where payment terms are more lengthy than our target 30 to 45 days. Cash consumed by asset acquisition and business combinations was $800,000 in the third quarter of 2023, a decrease from $16.1 million in the second quarter of 2023. The sequential decrease of $15.3 million was driven by the majority of our Virgin Orbit select asset acquisitions being realized in the second quarter. Overall, non-GAAP free cash flow, defined as GAAP operating cash flow reduced by purchases of property, equipment, and capitalized software in the third quarter of 2023, was a use of $47 million, compared to $16.7 million in the second quarter of 2023, or a more apples-to-apples comparison of $32.8 million when including the impact of our acquisition of select Virgin Orbit assets, most of which were classified as PP&E. The material step up in negative free cash flow was, as noted in my earlier GAAP operating cash flow commentary, was a result of lumpy timing of payments and receipts associated with our space systems manufacturing operations, and we expect a reversal of this negative working capital cycle in early 2024. The ending balance of cash, cash equivalents, restricted cash, and marketable securities was $374 million at the end of the third quarter of 2023. Reflecting on the past 4 quarters, we have made meaningful progress towards our long-term financial model. We have delivered consistent revenue growth, and when adjusting for the one-time release of a loss reserve in Q2, gross margin expansion, and shrinking adjusted EBITDA losses each quarter. With our strong launch manifest and greater contribution from space systems contract execution in 2024, we expect this trend to continue. Overall, we expect gross margin trends will continue to improve over time, thanks to the same factors that have helped drive improvement we've seen this year. In terms of when we can get to adjusted EBITDA break-even, while Neutron investment, especially R&D spend, continues to be the pacing item to achieving this critical milestone, although we view that Rocket Lab has demonstrated that its existing businesses are on a trajectory to offset the weight of this Neutron investment spend. With that, let's turn to our guidance for the fourth quarter of 2023. We expect revenue in the fourth quarter to range between $65 and $69 million, which reflects $48.5 to $52.5 million of contribution from space systems and $16.5 million from launch services, which assumes 2 launches. As referenced earlier, based on our manifested launch backlog, we now expect 11 launches in 2023 and 22 launches in 2024, with an expectation that our average selling price that continues to trend towards our current target of $7.5 million through the remainder of 2023 and into 2024. We expect fourth quarter GAAP gross margin to range between 24 to 26% and non-GAAP gross margin to range between 30 to 32%. These forecasted GAAP and non-GAAP gross margin improvements reflect a favorable mix between launch and space systems, along with a favorable mix within space systems. We expect fourth quarter GAAP operating expenses to range between $61 and $63 million, and non-GAAP operating expenses to range between $50 and $52 million. The quarter-on-quarter increases are driven primarily by having recognized a substantial amount of contra R&D credit related to our Neutron upper stage development agreement with the U.S. Space Force in the prior quarter, along with increases in staff costs, prototyping, and materials spend as we continue ramping our Neutron development program. We expect fourth quarter GAAP and non-GAAP net interest expense to be $2 million. We expect fourth quarter adjusted EBITDA loss to range between $23 and $27 million, and basic shares outstanding to be approximately 487 million shares. Additionally, the unique situation created by the anomaly and related pent-up impacts to the launch manifest as we prepare to return to flight and head into 2024, combined with better visibility on Space Systems program execution and revenue recognition as we prepare to ship the first spacecraft against the MDA Globalstar program in the middle of the first half of 2024, provides us with the visibility and confidence to estimate Q1 2024 revenue to range between $95 million and $105 million, putting in sight our first $100 million revenue quarter. This forecast would be the result of 4 to 5 launches in the quarter, yielding between $30 and $37 million of launch revenue, and $65 to $68 million of contribution from Space Systems. This would represent a significant milestone for the company, and we believe a strong endorsement of the end-to-end space solutions business model we're delivering on. And with that, we'll hand the call over to the operator for questions.
Thank you. At this time, I would like to remind everyone, in order to ask a question, please press star, then the number 1 on your telephone keypad. Your first question comes from the line of Edison Yu with Deutsche Bank. Please go ahead.
Thanks for taking our questions, and appreciate the level of detail you provided on the investigation. First question on the manifest for next year. Can you give us a sense of your confidence level on the 22? Is that sort of your base case, or in other words, the range is sort of 20 to 24, and the midpoint will be 22, or do you need kind of everything to go right to hit that 22 target?
Well, hey Edison, as with any launch contract, right? We are always somewhat susceptible to factors that we can't control, like customer readiness is always a big one. The customers need to turn up with their satellites on time. Weather, and of course, as I mentioned in my commentary, we have to execute from a manufacturing standpoint. But I think the key takeaway there is we have a completely sold out manifest for next year, at a number that is really solid. So I would say that we have to execute, and there's always some uncertainty from things that we don't control, but that's certainly what we're targeting.
Understood. And then just a follow-up to that, can you give us a sense, or maybe a bridge on the margin in launch? You had a very good quarter actually in 3Q. How does that margin trajectory look if you can get to that 22 launch cadence?
Yeah, I'll take it past that, Pete. So, Edison, yeah, I mean, we've long stated that when we get to our target model for non-GAAP gross margins of around 50%, that requires launching 24 times a year. So, we're going to make significant progress towards that as we launch, as we kind of strive to hit that 22 number next year. So, if you look at any given quarter, if we have, again, 6 launches in the quarter, that should be, at or very close to our long-term, 50% non-GAAP gross margin target.
Got it. And if I can just speak one more in on Neutron, congrats on all the milestones. Do we feel comfortable with the timeline? Should we interpret that as you guys feeling comfortable with the timeline on next year?
Well, look, there's still a lot of work to go, and the year's not finished yet. So we're pushing hard, but at this stage we're not making any adjustments, to our predicted timeline, but I'd just highlight there are, still some really significant tests to be completed. But, right now we're not making any major changes.
Got it. Thank you very much.
Thank you. Your next question comes from the line of Matt Akers with Wells Fargo. Please go ahead.
Yeah, hey guys, good afternoon. Thanks for the question. I wanted to ask on Neutron, after that first launch, what sort of rate do you envision doing Neutron launches, and what rate are you kind of capacitized to support now? At what point would you need to sort of add capacity there?
This is a very good question.
Yeah, hey Matt, it's a good question. So we're not trying to do anything Herculean on Neutron. We've lived through the pain of creating a launch vehicle and standing it up and bringing it into production. So it follows a pretty similar cadence profile to what we were able to achieve with Electron. So we'll do a test flight or a couple of test flights and then move into sort of 3 or 4 a year, and then continue to bootstrap and grow that. And really follow the same model that we followed with Electron, where we launch a little bit, we generate some revenue, and we make improvements to the vehicle, and we make improvements to the infrastructure. And we found that to be by far the most cost-effective way, rather than going out and building a giant factory to do huge volumes from day one, and just consuming a tremendous amount of capital. We've kind of always bootstrapped our way along, and increased flight rate and cadence along with that, and facilities along with that.
Got it. Thanks. That's helpful. And then if I could ask on, I guess, free cash flow, how much sort of additional expense was there around kind of the investigation in Q3 and maybe into Q4, and sort of how are you thinking about free cash flow into 2024?
Also good question.
Yeah, Matt, we didn't see a tremendous amount of, I would say, resource diversion. A lot of these kind of anomaly investigations take, a select group of very capable people to dive in and do the analysis and investigation. There's not a lot of capital spend associated with it, and we continue to keep our foot on the gas when it came to production of Electron. So the anomaly investigation itself really won't have any kind of noticeable material effect on cash flow in the fourth quarter. I think the biggest thing for us for cash flow is really around timing for these big space systems contracts. I mean, if you look at our launch business, people, the typical model is, you get people pay a 10% deposit at contract signing, and then there's milestone payments along the way. And typically, there's only 10% left to collect at the time that we actually launch the mission. So that's always been a good cash flow model. It's just all about getting that business to scale, which again, we're making great strides at being able to do. When it comes to space systems, they're large contracts. I mentioned lumpy a few times in the prepared commentary, and that's really true, because you can have the achievement, you have some delays of achievement of critical design milestones. You got to get through those gates before you can turn that over into the AIT phase of the program, where you're doing the assembly, integration, and test side of it. And so you can have periods, depending what your payment terms are with your customers. And on our largest space systems contracts, we're dealing with pretty sophisticated organizations that had pretty tough terms. It was we were chasing our first large and meaningful space systems contracts, so we weren't necessarily in the best position to negotiate those types of terms to our advantage. So it leads to some I would say some a little bit of interim to near-term pain on that side. And we've experienced that in 2023. We expect that dynamic from the operating parts of our business to turn around and be much stronger from a cash flow perspective in 2024. Now, we'll continue to see consumption when it comes to Neutron, particularly around prototyping, and particularly around infrastructure, because we still have infrastructure investments that we need to continue to make to prepare for that first launch at the end of 2024.
That's great. Thanks for the color.
Thank you. Your next question comes from the line of Cai von Rumohr with TD Cowen. Please go ahead.
Yes, thanks so much. So first quarter, it looks like you have a target price of $7.5 million. is that the price likely to be for the entire year, or given the vigor in demand, are you guys increasing to move forward? And if so, by how much?
Yeah, it's a good question, Kai. So the manifest that we showed in the deck, I mean, that is confirmed backlog. Pricing is not in question, right? So that does drive to our long-term pricing model in 2024. And that's all contracts, of course, that we can continue to add to the backlog. As we move forward, we certainly are seeing an environment that allows us to drive for firmer pricing. As being one of the few truly operational launch providers, we do see pricing power coming in our direction. And so we expect that longer term, we'll see upward movement to the ASP for Electron launches. But I would say, again, there's really no volatility to the ones that we showed on the manifest, because they're all they're booked and they're firm price.
Great. But with, I guess, not to beat a horse, but with Virgin Orbit basically gone, how come you don't increase prices? And when you talk about the longer term, at what point, what would cause you to raise the price? I mean, and will you then raise it? They're all going to go from 7.5 to 8, or how should I think about how that works, and how does it take into account inflation?
I'll let Pete weigh in on this one.
Yeah, I mean, we kind of have a standard, escalation for that, to deal with inflation year on year. And certain missions, not all missions are the same. Kind of to Adam's point is, when we do, some of the very complicated government and hypersonic missions, they command a much higher price than a mission where we're flying. Someone's bought 6 rockets from us, and we're flying the same satellite again and again.
Right.
So there's kind of variability, and I would say that we test the market pretty fairly, on that pricing range, but still try to provide the right price for the product and services that they're expecting from us.
Thank you. I just have one last one. So out of the 22 launches, how many are from Virginia?
I believe right now I think there are
all the haste missions.
2. Yeah, there's at least 2
Yeah.
and maybe 3 launches currently manifested for Virginia.
Got it. Thank you.
Thank you. Your next question comes from the line of Suji De Silva with Roth MKM. Please go ahead.
Hi, Peter. Hi, Adam. My questions are on the space systems, and thanks for the 1Q guidance there. The increase in 1Q versus 4Q, is that primarily the GSAT MDA program ramping up, or is that the second customer contributing? Any color there on the increase guided for 1Q would be helpful.
Yeah, there's a few things contributing to that. Obviously, the higher launch cadence, as we kind of get back to the pad, as Pete said, on November 28th. So it's really coming across the board. We've got strength in Electron that's coming through and contributing. On the space system side, there's a few things that are going on there, but the biggest element is really as the MDA Global Star vehicles again start coming off the production line. We have a much clearer line of sight to the revenue recognition as bill of materials are pulled to the production floor to assemble the spacecraft and do the testing and so forth. So it's there was a bit of uncertainty as we progressed through 2023, because you have milestones for when you get through key program reviews like PDRs and CDRs, and you really can't progress until obviously you get through those. Once you have that, then it's a much more nothing is easy in this business, but there's a much more kind of predictable, formulaic. You've got almost a day-for-day schedule of how you can kind of start to assemble based on the labor that you have and the BOM that you've received or ordered and when the schedules will arrive. So it's a much easier thing to predict once you get past those key design pieces and you move into AIT. So I would say that the majority of the step up in the biggest piece, I would say, maybe not the majority, but the biggest piece of the step up in Q1 is coming from that Globalstar MDA contract, but there is contribution from our other satellite programs as well.
Okay, great. And then my other question's on the satellite part, manufacturing part of Space Systems as well. With the MDA contract with the 17 satellites, and then a second customer coming on, I'm wondering what framework we should think about the capacity per quarter of the number of satellites you can make, if that's the right way to think about how that business can grow over time.
Yeah, I mean, I wouldn't necessarily just think about capacity, because the kind of spacecraft projects we take on are they're not just sort of cheap and cheerful, easy metal bending kind of jobs. We go into Mars, and we've got the MDA Globalstar is a great example. Is a very deeply complicated mission in a horrible radiation environment. So I wouldn't be necessarily tracking just the volume of spacecraft, but more so the complexity of the missions, because ultimately that drives a lot of value. And even the latest mission that we announced here today, the latest spacecraft, that is not that's not an easy build. So we tend to be very successful and do very well and create a lot of value in those. There's much higher fidelity, much trickier missions to do. So I wouldn't just use a volume kind of metric to kind of measure us.
Okay, understood, Peter. Thanks, guys.
Cool.
Thanks, Suji.
Thank you. Your next question comes from the line of Jason Gursky with Citi. Please go ahead.
Yeah, hey there. Good afternoon, everybody. Adam, really quickly on the balance sheet, what are the current thoughts or expectations around $100 million that's gone current here? Are we looking to refi that, or are we going to be taking some cash off the balance sheet to address that? Just want to figure that out from a modeling perspective.
Yeah, no, we're actively in the process of looking to refinance that. We've got several options. We're pretty far down the path with a few different providers, and they range from doing equipment lines to kind of similar structures to term loans that the Hercules loan represented. But yeah, no, that we're looking to refinance that. I think we're hopeful that we'll get that done in hopefully the next few weeks, and again, almost certainly before the end of the year.
Okay, great. And then I want to make sure that I fully understand the comments on Electron for next year. Are you at this point fully sold out, or if you had a couple of customers that wanted a quick turn mission, would you have the launch vehicles available to do that, or are you just kind of telling customers, okay, we're sold out for 24, got to look to 25?
Well, look, we'll always look for opportunistic opportunities. I mean, it's fair to say that production will be at near a full capacity next year as we deliver on those. But also, as you guys see and we experience, some customers slip out, and it's very easy for a customer to have an issue in a TVAC cycle and shift out 6 months, which would create an open opportunity. So, we never say no to customers, and although, the manifest is essentially full, it doesn't mean that there's not going to be an opportunity open through the year. So, we always keep that in our discretion.
Right. Okay. And then last one for me, just on Neutron. Can you just spend a few minutes talking about your current views on the demand outlook for that vehicle, and when in its development cycle would you expect maybe to get your first order or two as kind of proving out the concept of what you're doing here, and then if demand is as good as you think it might be, I'm just trying to balance that against the comment that we're going to bootstrap capacity there. Why aren't we running out and trying to fulfill as much demand as possible? So just kind of general view of the current demand environment for Neutron, when we might expect orders, and what kind of levers can you pull to more quickly come in and pull in some of that demand if you think it's really strong. Thanks.
Yeah, no, that's a great question, Jason. So look, on the order side, until a vehicle is kind of proven and flying, any launch contract that you can sign is basically worthless. We could go and sign a launch contract tomorrow with a number of customers that will be like, some $1,000 down and cancelable any time, but that really doesn't mean anything. And the one thing that you will always get from us is like real backlogs and real numbers. So it's almost it's almost pointless trying to sign something like that now. And then even if you do, we saw this with Electron, right? An unproven vehicle, you just take a massive haircut. So you have to do, really low introductory pricing. And with Electron, we carried some of that introductory pricing on for years, and we managed to flush it out this year. But for years we had some really bad missions. So I just don't want to go down that road again. But rather, when you have a flight proven product that in a launch constrained market, then it becomes very valuable. So I'd much rather arrive to the market with something that works, that commands a premium, than fill my manifest up with a whole bunch of low value launches now. And frankly, the customers that we talk to aren't looking to buy one or two launches. They're looking to buy quite a bit of capacity to fill their constellation or their other needs. So we also need to see them delivering and being on time at the pad, because if you commit to one customer and commit a whole bunch of manifest and they're late, then that's not a happy situation either. So when we're kind of reached a point of critical maturity, such that somebody is willing to pay real deposits and write real contracts, then that's a good time, and you'll see those kind of announcements from us. But until then, I just don't want to put us in a position where we've just got a whole bunch of rubbish, kind of solidified launch on a manifest that might look good in a slide, but actually isn't that real. And then on the kind of the bootstrapping, why not go out and just prepare for a massive volume? Look, I think I'd love to do that. That'd be awesome. But the reality is that big launch vehicles, they're easier to build than a small launch vehicle, but the challenge is they just consume a huge amounts of capital. And we have to be diligent in the fact to use the capital we have wisely, and kind of use it methodically to make sure that we actually put a vehicle on the pad and we're able to scale it in a really safe and methodical sense. If you had no constraints on capital, then of course you go out and build big factories and big pads, and away you would go. But it's not really an option, and nor is it really our style. So we like to put one on the pad, then we'll work through the block upgrades and the improvements that inevitably will happen, and then slowly ramp production over the coming years to meet demand.
That's great. Thanks, Peter. Appreciate it.
All right.
Thank you. Your next question comes from the line of Kristine Liwag with Morgan Stanley. Please go ahead.
Good evening, guys. And Peter, following up on Jason's question there on the Neutron order. So it sounds like you don't anticipate orders to occur until after Neutron has its first flight. Is that fair?
Hey, Christine. No, that they could occur earlier, but I guess what I'm saying is that the two things need to be true. That we need to have confidence that the spacecraft will be delivered, and they need to have confidence in us. And at this stage of the development program, as I mentioned before, there's still a number of critical milestones to go through. So I wouldn't expect anybody to put huge deposits down on a vehicle in this kind of stage of development. And I think, that's just the reality.
Yeah, so I guess another way to think about it is it sounds like you guys are prioritizing better pricing in the long term at the expense of building a backlog now and providing significant discounts, which could take years to offset, So if you're confident in your product, just wait till after launch and get
Absolutely.
better pricing. Okay, great.
Absolutely.
That's very
And
helpful
look,
color. Yeah. Sorry, go ahead.
I lived through that with Electron, right? And those contracts can just be really painful to flush out of the system. And there's no argument that there's going to be huge demand, and there is huge demand. There's zero argument about that. So as I mentioned before, like the smart thing to do is arrive with a flight proven product, and not have to do kind of crazy things with pricing and destroy the business model over it.
Great. That's helpful color. And maybe moving to space systems, it sounds like your Globalstar contract through MDA as a subcontractor has been progressing well. MDA recently won a $2 billion Telesat LEO contract. How much of an opportunity is there for you to be a subcontractor to that program or similar programs of that size? Because it's a pretty meaningful constellation size.
Yeah, look, I can't really comment on that program in particular, but what I will say is, we actively are pursuing, these many of these large programs, both as subcontractors and also as primes. So, I mean, there's a real opportunity for us. They're obviously, the large volume, but also the constraint on some of those critical components, like, solar is a huge constraint within the space industry right now, and we obviously own one of three suppliers of that particular technology in the world. So, yeah, we see a lot of opportunity there, and we're actively and aggressively pursuing these large constellations as, like I say, as a supplier and as a prime.
Great. And if I could ask one last one, you mentioned Solero. With Solero, where are margins trending in the quarter? And can you provide any update on your tracking towards the 30% gross margin target for that business?
Yeah,
I can take that.
Yeah, Christine. So, we've made very good progress towards our gross margin goals for that business. And we said that 2 years post-acquisition, we wanted to be at 30 points of non-GAAP gross margin. I think we're going to trail that by maybe a couple of quarters. But the progression has been pretty clear and pretty steady. And what we can definitely, we've made improvements to get better margin on the existing backlog that's in place when we acquired the company. But I would say in the course of the last year in particular, we've got a pretty stringent process for approving new customer deals. And, I don't believe that we've really seen, I can't recall the last time that we approved a deal that was below that 30% gross margin target. In fact, we're kind of toying with how to start pushing that target a little bit further north from that. Because long term, that's not our goal to be at 30 points. We view that as having a great opportunity for really healthy long-term margins. But great progress towards the 30 points. I think we're going to hit that at some point in 2024. And again, all of our kind of building backlog is 100% supportive of that.
Great. Thank you very much, guys.
Thank you. Your next question comes from the line of Ronald Epstein with Bank of America. Please go ahead.
Hey, guys. Good afternoon, good evening. A lot's been asked. I'm the last guy, so I'll be quick because I guess we're running over on time. But here's a question for you. I mean, a lot of the space startup companies have been having difficulty, and you guys were able to pick up some interesting assets from Virgin Orbit. When you look at the space systems business, is there talent you can pick up in the satellite world in terms of engineers and other things? I mean, some of the small satellite companies, their stocks are trading below, their equity is trading below $1 per share, and it's. I would imagine it must be a pretty good environment to recruit talent in. I don't know if you can speak to that, but as you try to grow that business, are you able to pick up some talent?
Yeah, hey Ron. Absolutely, that is true, and great talent attracts great talent as well, and the team that we've built there is well, it's simply awesome. So that's been true. What I will say though is, I think we've mentioned before, the bar to get into Rocket Lab is extraordinarily high. I mean, it's twice as hard. We did the metrics, and it's twice as hard to get into Rocket Lab than it is to get into Harvard. So we're very, very fussy about the folks that we bring on board, but certainly there's opportunities there for new folks. As some of those other businesses fail.
And then maybe just following up on Neutron, because this came up a couple times in some of the other questions. What are some of the milestones we should be looking for? As we look out into next year as kind of outsiders, not inside the company, what boxes can we check and say, hey, yeah, it's trucking right along, to feel good about where the program's going?
I presume you're talking about Neutron here, Ron.
Yeah, excuse me. Yeah, Neutron.
Yep. So we've kind of laid out a few. I mean, obviously, engines are always a long pole in the tent. So look for hot fires and kind of completions of qual programs and things like that. We achieved probably it's understated, but the second stage tank test was a huge milestone, because although it just kind of looks like a big black thing that we filled and made frosty and then blew it up, the reality is that validated like so many material properties, so many manufacturing processes, so much of the kind of core underlying materials and technology and designs were all validated by that test and by that that milestone. So it's sometimes kind of a little bit difficult. And then I tried this earnings to give some color about some of the other tests that are going on. There's just heaps and heaps going on, and so many tests and milestones met every day that it's kind of hard to to get them all on paper. But I mean, the key ones is fire and then fire reliably, out of Archimedes, and continued neutron structures. Keep looking for things that get frosty, because that's important milestones. And then I would say, next year is start to look for stuff coming out of the ground. Start to watch us pour concrete and things like that, because the vehicle drives the ground infrastructure enormously. So if the vehicle is mature, then the ground infrastructure can start to be built. So they sort of go hand in hand, and one leads the other. So if we're starting to pour concrete, then I would feel good, and stuff like that.
Great, cool. Thank you very much.
Thanks, Ron.
Thank you. Your next question comes from the line of Andres Shepard with Cantor Fitzgerald. Please go ahead.
Hey, good afternoon, everyone. Thanks for taking our question. I appreciate you guys getting us in, and congratulations on the quarter. Most of our questions have been asked, so maybe just one two-part question. First, with the roughly $400 million in cash and equivalents, would you mind just reminding us what is the expected run rate there? And then secondly is, you provided the revenue guidance for Q1 as well as your updated backlog, with 57% of that backlog being recognized in the first 12 months. Can you give us any sort of ideas or directions on how we should be thinking about that backlog being recognized in terms of seasonality or second half, first half? Any color there that you might be able to give us? Thank you very much.
Sure. Yeah, Andre, I'll take the first one, and Pete and I will both kind of chime in a second. But with the cash, we talked about the fact that we're 2024 from our space systems business should be a much more cash positive story for us. The nature of the biggest program, which was the MDA Globalstar, had a bunch of unique and quite honestly onerous terms when it came to timing of us getting paid. We've now kind of crossed the the river on that one, if you will, and we're on the better side of that as we now again move into the AIT phase. So we believe we've got sufficient liquidity to do exactly what we said we were going to do when we came public, which is that we wanted to broaden out our space systems business. We've acquired 3 businesses since coming public. we've also committed to getting having enough capital to get to the Neutron product to the pad. That's also well within the scope of what we've called out. But what I would say is, we still have a significant amount of capital to consume in getting Neutron to the pad, by the end of next year. Now, again, we're well funded to do that. The timing of that is a little bit difficult to predict because, as Pete's kind of gone through some of the milestones and his programs, they can move around a bit. There's different ways to kind of get there. There's some make versus buy decisions that take place that can affect how much cash goes out the door. So it's, I would say that, it's difficult to predict and also going to be dependent upon, other business that we close as we progress through the remainder of 2023 and 24 and what those cash characteristics look like. So right now, I would say that, our Q3 cash consumption number was kind of a high point that we've seen thus far. That could hover around in that range for, a quarter or so, but then we start to see that, significantly trend down as we get past these key milestones and Neutron gets closer and closer and closer to the pad. The biggest factor right now in 2024 is really going to be progress towards those Neutron milestones from a development perspective and also from an infrastructure perspective, as Pete mentioned. But again, we don't have any concerns right now that we don't have the runway to get to where we need to go. As far as the backlog and how that's going to be realized and seasonality and so forth, we don't really have a lot of view on seasonality. We haven't seen kind of true seasonality in our business. We've seen a lot of volatility, which has really been more a function for what we can tell, from some of our smaller customers. It's the access to funding either through, their government partner programs, whether it's through VC cycles and kind of, the success in raising funds and so forth. So we really see more effect on revenue as our customers kind of go through their kind of cash, kind of rich and cash poor cycles. But again, I think that what you'll see is if we've gone through an elevated quarter, we'll probably have another couple of elevated quarters before it starts to get much better. And we start to, again, I'd say not consume as much cash as we have, again, function of programs where we are in their life cycles and just, Neutron developments.
Got it. Thank you. That's super helpful and super insightful. Thanks again, and congratulations on the quarter. I'll pass it on.
Thanks, Andre.
Thanks, Andre. Thank you. Your next question comes from the line of Eric Rasmussen with Stifel. Please go ahead.
Wow.
Yeah, thanks for taking the questions. Maybe just on the HASTE rocket, you said you secured 7 missions in the past 6 months.
Vince, you closed the stream. Vince, you're on mute and you close the stream.
Yeah, it completely closed down by itself. I don't know what happened. Let me open it again.
It was taking too long.
Yeah.
Wow. Okay, I mean, this confirms that it is Palantir not wanting analysts to make questions. I mean, at this point, it's impossible analysts don't have questions.
Yeah, I mean, I don't understand how they have so many questions, these ones.
So and actually, deep questions are not random questions.
Great. Maybe just you made an announcement. You opened up an engine development center in the former Virgin Orbit assets facility. What sort of production capacity can you expect to achieve once operational, and what is the timeline to maybe hit that? Maybe you call it an annual run rate.
Yeah, look, well, the Virgin Orbit facility was a bit of a boon, really, because there is more equipment and capacity there than we can see in the future. For an engine facility, it's gold plated. So I mean, there's no numbers that we're working with at the moment that would see that EDC facility reach capacity.
Okay, great, thank you.
Thank you. Ladies and gentlemen, there are no further questions at this time. We'll now turn the call back over to Peter Beck for closing remarks. Please go ahead. Okay, that wraps up today's presentation. Thank you everyone for joining us for the call. Rocket Lab will be participating in some up-and-coming conferences displayed on the sheet there, and look forward to the opportunity to share more exciting news and updates with you then. Thanks again, and we look forward to speaking to you soon. Ladies and gentlemen, that concludes today's call. Thank you all for joining, and you may now disconnect your lines.
Let's do that. My God, there was no more analyst left on Wall Street that could have asked questions.
Literally no one.
So Arnie, what was your impression about this Peter Beck and how the earnings call was done?
Well, not knowing the company much, I struggled to follow the details. I mean, when we started talking about how's called it, the curve.
Yeah, I was actually I was actually surprised that I didn't understand the physics, but I understood that what happened, it was a very freak accident, and he kind of got that across. That
I understood that it was related to the battery.
Yeah, it was something that the high voltage reacts differently, under different pressures, and as the rocket was going up, like it hit this exact right pressure to have this electric arc, and over like a 1 meter distance, which is nuts.
Mm-hmm.
And then he said that it was like there was like gases around, and then he said like if any of the gases were not there, it wouldn't have happened. If the pressure was different, it wouldn't have happened. If the insulation was not facing the right way, so it was a really, really freak accident how it happened. But okay, what I'm curious about is I just want to give my thoughts really quick to the viewers that are here. So I think that this was a really good quarter. We can see that they are delivering, executing on the plans that they have. I'm actually surprised by how much they're going to grow in Q1. Peter Beck and the CFO is really, really down to earth, and they're not trying to pump the stock. So there was a lot of questions when the analysts were like, please give us numbers, please, especially when they were asking about this Neutron and like, why aren't you selling Neutron? And it's actually really interesting that they are taking, the road that is better for the future, but it's hurting the analysis in the present time, because they're delivering this rocket in a way that there is no signed contracts, but he explained it really well, that when you're trying to get contracts for these unproven rockets, you have to discount them, and he could fill up the manifest, but then it would take like a year or two of them losing money on the rockets and having very cheap prices, and instead they want to develop the rocket, and once the rocket is developed, and it's flying, then they want to make contracts, and they will be scaling it very slow because that is the most efficient way. So it's a very down to earth, very long-term thinking, and it is the best for the long term of the business. So overall, I was very, very impressed with the team on the call and the numbers, and there's nothing that I have to complain about.
Actually, a very different vibe from Elon Musk, as you mentioned. I'm thinking that basically Elon Musk was actually very smart in exploiting the fact that the interest rates were so low, basically to throw money to SpaceX and Tesla. Now I can speak more about Tesla because I was following it closely. I was surprised basically how he exploited both the free rates and the stock that was extremely extremely expensive to basically print a gigafactory for free. Right now, I loved when he was asked about the financing, and he said, "Okay, potentially we could build crazy high, not launch camps, but they are super expensive. We are not in the environment where we can just throw money there."
Yeah. I sometimes wonder if Elon would have made it without the zero interest rate environment. Like I think he was extremely lucky that his business did manage to scale up and become profitable, a few years before, or basically the year when the zero interest rate started going away. So yeah, Matt,
Well,
Matt Money, I've been replaced. Yeah, you didn't come today. I mean, I know you were busy, so that's completely fine. And you were missed, Matt. But we will come back to you Saturday when we cover this earnings call.
Well, do you think they missed an opportunity with Rocket Lab to do the same thing about exploiting the interest rates?
I mean, they kind of did, because if you read Rocket Lab's they did exploit it, because when there is this book that people mentioned in the comments, which if you're really interested in Rocket Lab, before you buy the stock, I think you should read that book, because it explains why there is this big change in the space industry, like how come there is all these private companies popping up, and what you can expect in the future. And then the author actually follows Rocket Lab's history and for like 3 other companies' history. Very, very interesting. And so Rocket, like this guy, this Peter Beck, he comes from a country that has no space industry. They didn't have a spaceport, and they don't have venture capital culture. So he had like no way to get money. He couldn't tap into talents. And I don't know if you know that if you launch rockets, like you can put nukes on them, right? So the US is actually blocking a lot of countries from being able to develop their own rockets. And he had to convince his government to make like a treaty with the US so that they could launch rockets from New Zealand. And so the company was extremely bootstrapped, very low on money, all the time. And when they went SPAC, then they got 900 million in cash, and that was the first time.
With the SPAC, they got the money and the visibility, but somehow they managed to get there basically on their shoulders.
Like before the SPAC, I think they had a very rough time, and then they got like a successful rocket, and then they had 70 million in funding, which quickly burnt up, and then they got 150 million in funding, and then they got the 900, like the SPAC, 900 million, and that was the first, I think, breather for this Peter Beck. Like, okay, we're not going bankrupt, like we're actually getting trust to, and you can still you can still see in his thinking, like I don't know how much you heard it, that he's very much thinking with the money, and he's saying that like we could build a big factory and we could do this, but the rocket is going to change. So the smartest thing with the rocket is to build one, see how it's working, and then iterate on the next one, see it. And even again on this, that he's not willing to even sell the rocket, like he wants to get the max price for selling the rocket, and because he's like, he remembers how it went with Electron, like with his first launch, that it had to be sold very cheap, and then they were cash strapped.
What is the thing that you like the most?
I mean, this was one of those earnings calls. If I compare to Palantir's last earnings call, I feel it was a jackpot. Like you heard everything that you wanted. This earnings call was more like the one before this one for Palantir. So it's more like everything is on track, like with the thesis, and they are even surprising on how fast the revenue is growing. But with this company, obviously the main worry is not like how fast they can grow the revenue, but it's can they keep the losses in check, and do they have enough money to developed the Neutron rocket. And this was funny to me that they didn't really answer these questions. Like they were just saying that. What I liked is that he said that this burning 40 million, it maybe will be like one more quarter like this burning 40 million, and then the losses will go down. And that the CFO says that he he does expect that they, with the current money that they have, they can develop this Neutron. But they weren't like, they definitely were not trying to pump the stock. They weren't like, yeah, for sure we make it. Why are you even asking this question? Yeah.
That when they asked about the financing, they made me think that, as you said, they were not willing to pump the stock. Potentially, they could have done it. Like if their intention was to raise more capital with equity, they should have pumped the stock, while they mentioned some alternative form of financing, hinting of some debts. And
No, I mean,
what
because they have a debt that they have to repay, I think next year, that is 100 million, right? And then they have the cash to do it because they have 400 million in the bank. But if they repay it, obviously, like a lot of the cash goes down, and that was also a worry in the community, that if they repay this loan and they don't have they have zero debt, but then is that 100 million lessening their making it so that they will need to raise money. And
well,
I
they
think
can
that it's,
refinance it.
yeah,
I mean, obviously it's costly now, but
it's
I
better
don't
than
know
diluting
if
the shareholders.
if this is a topic, but I'm following up Celera, which is a Canadian company. Basically, they are a tech company in biotech that so far is burning cash because the only molecule with which they made money now is not selling any longer because it was a molecule developed for COVID. So far, they just have this molecule portfolio that they are building, which is evolving and actually growing in number. But meanwhile, they are burning 20-30 million per quarter. Well, they have $800 million in cash. But the very interesting thing is that the management said, we will do whatever we can to avoid further dilution by issuing equity. Actually, the management is buying equity very aggressively, their own shares. And what they got is like $300 million from the Canadian government. Basically, the Canadian government is financing the manufacturing facility. So there is this peculiar situation where basically the company trades at a market cap that is 1 billion, and if you sum up the cash on hand and the free money from the Canadian government, that doesn't enter in the balance sheet. So that's why I think many people, analysts, don't really pay attention to that. Basically, you get the company for free. But we thought, I don't want to digress too much to Upseller, but this to say that if a company is well loved by the government, there are these sort of weird free money financing options. So I encourage you to actually look if there are some chances that the relationship between Rocket Lab and the government, I don't know which one better, the New Zealand one or the US one, or maybe both, could be maybe partnering with that, so that, as you mentioned, there are certain kind of companies where you don't want them to fail. And for instance, what I realized is with Upseller is a company that is systematically important, because, for instance, with the COVID, they were the first one in the world to receive the blood containing the antibodies from someone who developed them naturally. So this to say that when a company becomes critical for the government, as also Sachin said, the government can't really allow them to fail.
Yeah,
So
I mean, yeah, because
so you need to understand if this is the case.
Yeah, this is definitely like from multiple viewpoints, because NASA has a program. So I just wanted to tell you, like, when I invested in Palantir, like, one of the things that I loved is that they were, I don't know, I didn't love it, but they were gap, what is it, like, not profitable, but because of the stock-based compensation, they were actually bringing in a lot of money, right? So in these bad times, there was zero chance of bankruptcy, right? But then somehow people couldn't see that. It was somehow like a very negative that they're not making money, And like in Rocket Lab, they don't have this, like, that they're cash flow positive with the stock-based compensation. But what they do have is that NASA clearly states that they want private companies to compete to get contracts from NASA. Like, they're moving from the model that they are developing their own rockets, which is super costly, always late, to bidding like private companies, and they say, like, look, we need this done, like, please give us bids. And they're very afraid of having a monopoly. So they have stated this, that it's like it's a national security interest for the US to not have a monopoly. And I think they have a policy that when they have programs, it has to be at least always given to two companies. I don't know if you saw, like, on the moon lander, or when they do, let's say, the resupply missions to the space station. People can correct me on this. I'm not like a full expert on this. This is just what I've read on time, or like during the time. But basically, like, they're making sure that it's not all of it is going to SpaceX, right? And then, so the US government is very, very interested in having a vibrant space. And then you look at, like, who are the actors? And there is about 250 rocket company startups that are trying to make rockets. And then I think there has been like 5 rocket companies that have managed to shoot up a rocket, right? And if you don't manage that, you're just a zombie company that you just take in financing, and and then out of these 5 companies, like, you have SpaceX, you have Astra, you have Rocket Lab, there's another company called Firefly, and maybe 1 or 2 more. And this Astra company is about to go bankrupt. And Firefly has maybe launched like 1 rocket or maybe 2 rockets so far, and then they don't have a big manifest. So it's like you have SpaceX basically, and you have Rocket Lab, and they're in different. If you can see, like, this Electron is something that the Falcon 9 doesn't do. So it's like they are in different segments, and
because they target more the smaller satellites, or just the one closer to the orbit.
Exactly, because I quickly explain this to you, that, for example, if you remember the Hubble Space Telescope, that one is like a school bus size telescope, and it takes like a committee to build it. They decide on something, and then it's probably 5 years to build it, and many billions of dollars. And when you invest that much money, then you want this satellite to be working for 15-20 years. And the way
they
you
are bigger satellites typically.
Exactly. But the problem is that when you decide with the committee to do it, 5 years later, when it's ready, it's already too old. Like, there's already new technology, and so you're shooting up this old technology, and you're planning to use it for like 15-20 years in this geostationary, like, it's very far orbit, so it always basically stays with Earth. And in the 2010s, like, they realized that technology has evolved so much that they can like take a shoebox and put, like, somebody actually did a test to shoot up a smartphone to see if a smartphone would work in space, and it did. So they realized that they don't need all this, like, very complicated space hardware. They can actually use off-the-shelf parts, which meant that the cost came down unbelievably much. And then they realized that then to make the satellites is like a few months, and they can make like the latest technology. And instead of paying billions for the satellites, they can pay like $10 million, and then they shoot it into this low Earth orbit, which is much closer to Earth, and then
So
many things.
if I remember correctly, this closer to Earth is called the Leo.
Exactly,
and
exactly.
is this what Rocket Lab does,
Starlink.
right?
Yeah, exactly. Rocket Lab.
I mean, they
I
shoot
think they can do. I think they can do different orbits, but most of the interest is in this Leo, because, for example, like all of Starlink is in Leo, you know, and then there is another company called Planet Labs that what they do is they do imaging of Earth, right? And then if you go very, very far, like this geostationary orbit where you move with Earth, and that's why like the satellite is, that's like 36,000 kilometers away, right? And then the Leo is like maybe 500 kilometers away. So it's like, also with Starlink, like the reason it's in Leo is because the lag of, you know, the signal going 500 kilometers up and then back down 500 kilometers is a lot less than going 36,000 up and 36,000
you just want
down.
more proximity for the Wi-Fi, basically.
Exactly. But then the problem is that when you're in this Leo, you still have a little bit of atmosphere. So the satellites, they can only stay up like 3-4 years because after that, like they slow down so much that they fall back into Earth, which is also convenient because then the technology evolves so much that those are like old again, right? And
so we need to be careful when we walk outside because a satellite can
no,
drop.
No. They are the engineers think with that, and then it's made from materials and it's being done in a way that they burn up. Like they don't want to have space junk, right? And this is this new space age that when you start to have these mega constellations, then you constantly need to like produce the satellites. You constantly need to shoot them up because, you know, they like every 3 years you have to change out all the satellites, right?
Well, what surprised me about this industry is that I didn't care it at all. Some years ago, like 2018, 19, I actually assisted to a presentation of some Italian guys that were making satellites, and I thought, wait a second, like this small team of guys are actually making satellites. So it means that making satellites is not that like I needed to forget the paradigm of the satellite being something like a monster stuff. It is something like a more a nice box with things inside and nice functionalities. And then when I studied this company called Avio, which is basically the Italian rocket lab, I realized that this part of the Leo is the more interesting, and the part where basically also the European NASA is putting a lot of money on.
Yeah, ESA, I think it's called, European Space Agency. Yeah.
And then they have these programs called Ariane and Vega.
The Ariane I heard a lot about. I thought that was a French.
Let me share the screen so that I can show you. I mean, I studied. I looked at it years ago, so it's not that I know the company well, but just to give a sense, this is the presentation from Avio, and you see. Because Ariane, I think the Ariane group is French, yes, but they work together with Avio to basically throw stuff for ESA.
Wow!
And actually, this company went public with a SPAC as well.
Really?
Yes, but many years ago. That's why I studied it, because basically a fund manager for which we were making research invested in a SPAC that made a first merger. Then the residual SPAC made another merger. So I studied all the companies, like the SPAC after the SPAC, the SPAC, the SPAC. And you see, this was a SPAC yet, and then it merged, went well, and then boom, crashed as well. But it's not a bad company. For instance, look at this
I just want to say that what do you think Rocket Lab stock did after this earnings call? Just do you think it's up, down?
I saw
How
some
much?
comments before that it was like up for 3-4%, and it makes sense. Like I liked the way it's like they made it clear that they are in a good direction. They are aware of the things. They didn't say anything that was worrying. For instance, yesterday, I think the Robinhood earnings call was just okay. Then maybe some people didn't expect the $100 million hit that was
even
announced.
though it was pre-announced, yeah.
And the management said something like, in Q4, we are going to increase the expenses maybe for some legal things without really specifying. And I think people got scared of that. I wanted to show you this slide because this is something that I mentioned also related to Palantir, just to give a sense of what industry people think of the space. You see, in the launch part, they show Avio, Ariane, SpaceX, Northrop Grumman.
But are you showing it? Because now it's showing it's very small and
no, I was sorry. I was how can I share this title? Okay.
Here we go. Yeah.
Okay. I wanted to share this. Okay, so basically the space economy worth almost 400 billion. This is something I mentioned also related to Palantir, and for what I understand with Rocket Lab, we are mainly here in the launch part, but also here in the satellites.
Yeah.
Rocket Lab not mentioned here, so you can complain to this company, Avio.
Exactly.
Do you
I mean,
think
they are small. Rocket Lab, I think they're definitely not. I mean, you saw that they're going to have their first 100 million quarter.
How big is Rocket Lab? Just to have a sense, because this company Avio is $200 million right now.
Like in market cap.
In market cap.
Really? I mean, Rocket Lab is 2 billion in market cap.
Whoa. Well, this is an European company, an Italian company, so I don't expect too much. But what I found interesting is that, for instance, this company is both is
so
like
funny.
EBITDA positive.
They have like more revenue than Rocket Lab. Like, how can they be? And EBITDA positive.
Also, the backlog is actually very way bigger.
1 billion. Yeah. How weird! Because it's like this. Are you sure they're 200 million in market cap? That's like they have a 0.7 price to sales or something.
Look.
Okay, guys, we all abandon Rocket Lab and we buy Avio instead. No, I'm kidding. It's like 1/10 of the stock price.
Well, have a look at it. Can be useful for a comparison.
It's a very good point, actually, to have a look at this.
Actually, look, they have 100 million in cash, and the entire company cost 200.
And they're a cash flow positive. Okay, that just sounds funny and silly. Yeah, because I mean, on Rocket Lab, it's like the models that I have done, and I wanted to revisit my model after this earning. Like, even pessimistically, like you can get the valuation that they are now. Like, I think that, for example, why this stock is not bigger is because we are in the market that we are, and they're not a cash flow positive. I mean, they're a past SPAC, they're a money losing SPAC. You know, like, I think that's how Wall Street would look at it. Sorry?
They are labeled now.
Yeah. So they're a money losing SPAC in an extremely capital intense business that is very risky, and that's how you get the price to where it is. And it was hovering around $6, and then like this Peter Beck sold what was it, like 6% of his Rocket Lab position or something, or 0.6%, I don't remember, but he made like a bigger sale, and this failure, like rocket failure, happened, and those two like made it from like 8 to 4. And I was like, it's so like I felt that all the risk was out of the stock, like it was full of bad news, and yeah. So but this valuation on the Italian company is nuts.
Well,
maybe
have a look.
it's the growth potential that is out with them, that their main customers, the ESA maybe, and I don't know.
Well,
I will look at it.
Well, consider that the NASA would definitely spend way more than European counterparties. But at the other hand, I think it is good to have a glimpse to
Yeah,
the key difference, like understand why Avio is actually positive in terms of numbers, while Rocket Lab no. Like, what are the key factors that Rocket Lab can solve?
Yeah, I mean, I'm sure that the investors, I mean, they can correct me in the comments if they want. Like, I think most of the investors, I'm definitely are here because there is this potential that they can develop this space infrastructure that they also mentioned in this call. I don't know if it was like a few sentences that they said that they're evaluating what they should do, and there will be announcements on it in the future, but they didn't. They definitely have this culture of not over promising and not like giving this future projections, and it was very shining through this call. By the way, do you know this Kostadin Ristovsky, who commented here?
Well, I know him from Twitter, and we had a little bit of question answers the other day with Palantir.
Okay, yeah. I really like him. He has a very good YouTube channel. It's very, very technical. He explains terms that I think all this, but it's new information to me, And he's someone who I guess could buy this Avio. He just wrote, Avio has an enterprise value below 100 million and generates 7 to 10 million in operating income, but no growth.
Well, that's the point. If you have a relatively little revenue now, but the backlog is actually very strong, that sooner or later that backlog should become revenue. Now, I don't know exactly why there were no push into revenues. What makes me think is that right now space doesn't seem a real priority for the commercial world. Maybe for the government, for the defense.
No, there is. Look, Amazon is developing this Kuiper, which is a Starlink competitor, and it's suspected that it's Rocket Lab who's building those satellites, but it's so funny because they're not disclosing it. Rocket Lab said that they got a mega constellation order from a very big company, but they're not disclosing who it is. And then he was giving an interview, and then he said, we have customers like this Global-Set and many other customers, and people are like, he said it. he and
like
and
the conspiracy Palantir Tesla.
Exactly, and that's a really, really big because of what I said, that these satellites, imagine that the Kuiper is 7,000 or 10,000 satellites or something like this, and then imagine that you have to shoot them up, which the Neutron rocket that they're doing would be perfect, and every 3 or 4 years you have to change out the whole constellation. So basically it's almost like it's like a shoe, that you wear, and then after a few months,
like the iPhone. You
buy
it, you wait 5 years, you get another iPhone, and you don't.
But you realize that it's not that the whole constellation gets changed, because it would be that you like Starlink, they shoot up 100, and then the next month they shoot up 100, and then they keep shooting them up, and then this is how you get the whole number. So basically, it would be a continuous like if they get the Neutron going, it would be a continuous business, because they would have to manufacture, I don't know, 200 satellites every month, shoot up 200 satellites every month, and that's how you like maintain the constellation, you know.
Mm-hmm.
And
Well,
there
now,
is
but for
sorry?
instance, Avio is only on the launch now that I remember that. Could it be that building the satellites is actually that costly?
How do you mean that costly? Or
No, because of the gross profits from the satellites part,
it was
where
in Rocket Lab,
in
I
the
think
Rocket
that they
Lab,
were,
yes.
yeah, it's actually a good point. I wanted to talk about that. That they on the investor day, they said that the rocket launch business, they want to bring up to 50% gross margin, and they said that what will get it to 50% is like increasing the launch cadence to basically they think that their max limit in the future is 3 per week, so like 150 per launches per year on the small Electron. And they reiterated that it's literally the same amount of people that shoots the 22, right? So it's like you get like from the same investment into the physical buildings and the personnel, you get like almost 10x the launches than what you are doing now. And then he said that on top of it, if they start reusing the rockets, that's also something that would like make it go to this 50% gross profit.
Okay,
and
so to really understand what can unlock this company, what is the bottleneck that prevents that thing you just described, the three launches per week from now? Like if you have to make the list,
yeah, I mean,
what are the constraints?
Yeah, I mean, like they mentioned also that because this is why they want to be an end-to-end space service company, is because sometimes they make a contract with the customer that you bring us the satellite on June 10th, and then we shoot it up June 11th, right? And then the customer comes on June 10th and it's like, yeah, the satellite failed this test and we need 6 months more, and then they made like the rocket ready, but there was no satellite ready to launch it. So they even asked him about this, like, can you do more launches than this 22? And the way I understood that answer is he said that the factories are running on the current max, and that's why they're producing 22, but very likely there will be customers that will not be ready to launch. So if somebody else comes who is ready, then they can switch around on the manifest. And I think that this is why it's so smart that they're going on this end-to-end, because if they manufacture their own satellites, then the actual line is then they're reducing this risk of things not being done on time.
Basically, if they have also their own satellites, is like once they decide to launch the rocket, they launch it, and they can fill or from external party or their own satellites.
Yeah, exactly.
And
or
so
if they
it seems to me that right now the bottleneck are the time to build a rocket, which should increase. Is it limited? I have an idea how much time it takes to build a rocket. And if this becomes reusable, I guess it's not reusable many times.
Yeah. And I think that it's parts of the rocket, or like they do need to swap out certain things on the rocket. Like it's not like you refuel the rocket and you launch it up again. That's the Neutron one that they're developing. They're trying to do it as close to like a jet as possible.
Hello, there was a slide where there with different colors. The one the slide with 22 mission booked in 2024. There were the rockets with the red color called recovery. With recovery, they mean reusable, or
no,
some parts are reusable. What is that?
No, what they mean is that they try to because basically, okay, like the difference between SpaceX, right, is that here one launch is like 7 million and a Falcon 9 launch is like 100 million, you know. And he said that if you try to recover a rocket on a drone ship, for example, it's super expensive for this 7.5 million rocket. Like he was explaining, like just to have a drone ship in the parked in the harbor is like $50,000 a day, you know. And then he was like, we cannot have that because our rocket, it costs 7.5 million. It doesn't cost 110 million, right?
Okay, I
And then
think this is similar to Avio. Basically, I remember I read the cost is so, well, is much, but is so little that basically building the capability inside this small rocket makes it cost too much.
yeah, and then they came up with an idea that what if they put parachutes in the rocket and then they go with the helicopter and then like try to catch the rocket, and then I don't know, like as far as I understood, it was too complicated in the end to do it, because if it's like windy weather and you know like you have fog, then it's like you can only do it in special circumstances. And then instead they redesigned the rocket so it's like kind of waterproof, and then they like soft land the rocket into the ocean, and then like a ship goes out and gets the rocket like out of the ocean, because their rockets is made from carbon fiber, and so it's I guess a lot more resistant to water. And then they look at the rocket, and I guess some parts they do need to swap out on it. And that's what they mean with the recovery, that they will like soft land it in the ocean and try to get it back.
Okay, so that they don't waste the entire rocket, they just
Exactly.
need to. This is interesting.
Yeah. Yes, I think that for the live stream, this is we did a marathon here, 2.5 hours. So I think I'm going to end it. It's very good earnings. As I said, I'm a very happy stockholder. The stock is up, and I think it's well deserved. And yeah, now we just need to execute. Thanks for everyone.
Another question, very fast, since you mentioned it previously, that there is the speculation that Amazon could be leveraging Rocket Lab to launch its own constellation. Where is Blue Origin involved?
I mean, the problem with Blue Origin is that they're not ready with the they're super late on the rocket.
Okay, they just made the launch on the space to make the video.
No, do you mean when they flew with tourists?
Yes.
Yeah,
but
like
they're not focused on building like rockets for these kind of uses.
I mean, they are, but they're just like based on this book that I read. Like, you know, SpaceX, you have like this dictator Musk who is like, you guys need to hurry, and you know, we're standing there with the gun and everybody's running. And then Blue Origin is like the total opposite. Like apparently they have like this perfect work-life balance, and there's very soft deadlines, and you know, like people kind of do whatever they want, and then they're extremely delayed on their like Blue Origin was, I think, founded a year before SpaceX or something, and then they they don't like these tourists that you see, like they went 80 kilometers up and back, which is like just out in space. But the orbit, like to go into orbit, you have to go up to like 500-600 kilometers and much faster than they have been going, and that they have not done yet. Like they have never.
Okay. So basically, so far, Blue Origin is just marketing.
Exactly. It's like it's like the Nikola. It's like the Nikola with the Badger, you know. It's like we have these amazing 3D renderings of rockets, and they have unbelievable backing. I mean, I don't know. You know, they have, what was it like? I don't want to say something stupid, but they have like 7,000 employees or something, and people are like, what are they doing? Like they don't have, like they barely have revenue. I think it's over, like, I'm not sure in the number now, but we can Google it later, but over 1,000, you know? So it's crazy. Anyways, thank you so much, Arnie. And thank you
My pleasure.
everyone who was on the live stream. And see you guys on Rocket Lab Weekly with Matt. And yeah, maybe Arnie if he wants to join in the future.
Maybe in the future.
Yeah, exactly. Cool.
Thank you so much for having me here.
Yeah.
I like
Good
this
night, everyone.
space exploration
Yeah.
in the middle of the night.
Yeah, awesome.